Hey, Ryan Lee here with Planet Cheapskate, popping on here to give us our rate update going into the weekend. I've got a storm going on behind me here, so if there's any lightning or thunder, I apologize for the audio or visual interference. My plant's up back there looking really thirsty, so after this is over, I probably need to get him some water. But hey, hope you had an awesome week, that you crushed your goals. Wanted to pop on here to do our weekly rate update like we do every Friday going into the weekend, so you know exactly what the rates look like when you're out going to open houses, checking out houses. Maybe you're putting those offers in and you're getting some of those cost sheets back from other lenders. You want to make sure to hold them accountable, make sure they're giving you something good. And so these are these are not rates that you can just go to a bank, credit union, ask them for. When you call them up, when you walk in there, they're going to give you whatever they feel like they can get away with. So we'll get a little bit to that here in a bit. But wanted to start off by just saying good luck to my realtor partners out there. If you need any pre-approvals, if you need any help marketing, anything like that, let me know, and I will dispatch my resources to the full effect, and I'll get you taken care of. I'll come out and see you at an open house, stop by, give you a little realtor survival kit, like I call it, and get you going. So I wanted to start off by just talking about a little bit of story. I like to go tell a little story each time that gives a little bit of insight. ROVs, have you ever heard of those? ROVs are reconsideration of value, and every borrower has the right to do an ROV. So if you have an appraisal that comes in low, you need to be asking to potentially do an ROV, reconsideration of value. Lenders don't like them. A lender, and that's why a lot of realtors, I'm shocked, have not heard of them. And that's more to the effect of, are you working with a broker who's independent, or are you working with an agent of the lender? Okay. When you work with an independent mortgage broker, you're working with someone who has no loyalty to the lenders, no loyalty to the bank, no loyalty to whatever lender branch that they're representing. Their loyalty is to you and to your clients. And so if I see an appraisal come in low, I'm always going to look into the option of doing a reconsideration of value, the ROV. If we're doing a VA, we can also look at doing a what's called an MPR, which is a minimum property requirement waiver. So if it's something that has nothing to do with health and safety, we can look at doing that too. These are two things you really need to dig deep in and ask, like, why do I not know what these are? Why is my lender not bringing these to my attention when these could possibly save a deal? Reach out to me, 316-744-5819. We can schedule a coffee, we can schedule lunch. I'll tell you all about them. They're awesome, awesome tools to put in your utility belt as a realtor. So the one that I had, we actually found you have to find better comps. So you have to find better properties that just fit better with the subject property than the ones that appraisers are using now. Newsflash: appraisers are not the best at finding comps. We all know that. That's going to be a realtor's bread and butter. You guys are experts at finding variable sales. Appraisers, not so much. So it's usually a battle that we can win, but we have to approach it as a partnership, as a team, and I'm someone who is going to do that for you. So as far as my rates go, every Friday I make 50 of the most competitively priced banks, lenders, you know, whoever investors compete to show us the best rates we can get. I take an average borrower. I take someone with a 700 credit score looking to borrow $250,000 and to do a 30-year fixed, and we do a 30-day lock, okay, which is a standard time it takes to usually wrap one of these up. I'm not doing anything crazy to get these numbers. A lot of people are like, how are you getting those numbers so low? I'm just taking an average borrower. This is what you get by making banks and lenders compete. They're going to give you the best of the best. Now, also, these rates can be beat. These are not unbeatable rates. But what you need to ask yourself is, okay, they're beating Ryan's rates, but how much is it costing me? Because when I do these rates, I never have any points. I do not charge any points for these rates when I do them. So that's an important factor. I can get you lower than this, but it's going to be over a point. And so there has to be like kind of a a line in the sand as far as the rates go. And traditionally, more and more, it's not the case just because of inflation, the cost of lending and all that. But traditionally, if you were getting a quote, you wanted to stay under a point. Okay. More and more people are treating points kind of like prepaid interest to get a better rate for the short term, whenever they want to get like a lower payment or whatever. But when I do these rates, so we can compare straight apples to apples here, never charge any points. So when you're out getting your competing quotes, you're getting a quote from a bank, anything like that, you bring up my rates, they're going to say, "Oh, well, I can beat those." Yeah, charging me points. I want to see your rate without charging any points. Then compare it to my rates and see how it shakes out. Even no points, these could possibly be beat. Maybe they're signed up with a lender or an investor that I'd never heard of. Maybe, So this is just to give you a good average of what a mortgage broker can get you on the rate side of things. So, um, uh, looking at the market, we are the average mortgage rate is, and this is talking about conventional FHA, VA, USDA. There's a some data that I look at every day that kind of just puts them all together and just says, hey, this is what the average person that's locking today is getting when you put all the loans together. And we're at the highest level since October of 2022. And that's 6.96% is the average mortgage rate someone's getting locking today. So we're creeping up there. Back in October, it was like 7.06 percent is what people were locking in back then. So rates are creeping up. We are in a rising rate environment. I'm trying to tell this to people whenever they're out shopping and doing their, looking around. Hey, I can't guarantee you tomorrow these rates aren't going to be an eighth of a percent higher, or maybe they'll be an eighth of a percent lower. We don't know. This is a weird market. It's changing every single day. So, also updating on the mortgage-backed security market and the 10-year Treasury market. Okay, these two markets have an inverse relationship, and so what that means is when one is up, one is down. Okay, when the other's up, the other's down. Okay, so mortgage-backed security market is just like the stock market. There's little charts. They're going up and down all day based on investors' desire to buy those mortgage-backed securities and not, okay? When the demand to buy those mortgage-backed securities is really, really high, that causes your mortgage rate to come down. When the demand to buy those mortgage-backed securities is super, super low and nobody wants them, then they have to jack up your mortgage rate to make it enticing to those investors to buy those mortgage-backed securities, okay? So 10-year treasury is an inverse. So when 10-year treasuries are super, super popular and everybody's wanting to buy them, and it goes, to the moon, guess what? Mortgage bonds go down. Okay, mortgage bonds go down, and when mortgage bonds go down, that's bad for the rates because the rates are going to go up. So I hope that makes a little bit better sense, and I explained it to you uh, pretty good to where you understand it. So that's what I'm doing. Like most of my day is just watching these charts to know when I'm supposed to lock people in, when I can get the optimum pricing for people whenever, uh, we're looking at doing that. These are things that you get by using a mortgage broker. Most of the mortgage brokers are watching the mortgage-backed security charts and the 10-year treasury charts all the time. And if they're not, shame on them because they're not representing you to the full effect, because that's something that you should get specialized by a mortgage broker. It's what you get working with me. So, uh, these rates. Oh, my thing broke. Okay. These rates are what I get by making 50 of the most competitively priced banks, lenders compete all over the United States. Some East Coast, some West Coast, some here local, Midwest, all over the place, Michigan, everywhere. I make them compete. They're going to show us what the best they got is. And I think I said it previously. I take an average borrower, someone with a 700 credit score, looking to borrow $250,000 on a 30-year fixed, and we're doing a 30-day lock. And these are never any points. Okay, so without further ado, let's get right to these rates. Okay, conventional, I got 7.5 with an APR of 7.796. FHA 6.75 with an APR of 7.472. VA is at 6.625 with an APR of 6.833, and USDA is at 6.75 with an APR of 7.2 0.01. Okay, so conventional is up about a quarter, which is a huge jump. FHA, USDA is up about an eighth of a percent, not too terrible. VA staying pretty flat, but that is the rates. Conventional is very disappointing. It's up super, super high. But let's see, went over that, went over that, went over that. Hey, if you like these, and I'm gonna start trying to give you a little bit of snippets of little hacks that I've discovered, over the years of doing this. But if you like these, check out my other videos. I do hacks on each one of those at the very end to where you can figure out little tweaks to save you some money, to save you some heartache whenever you're going through the process to get it done a little quicker. But that's all I got. Hope everybody has a happy and safe weekend. Stay cool, stay dry, and I'll see you on the other side.